Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago. Bringing you some afternoon commentary here in the energy market. So let's get started. Crude prices, they've had mostly a weaker tone here today. Earlier this morning, they weren't too bad, and we kind of saw a little bit of downward pressure. Currently, we're trading here the September contract around 51.60 a barrel. That's off about $1.88 here. So we're really kind of seeing a little bit of a pullback on that right now. Nat gas completely bucking the trend. Nat gas is up about 7 to 8 cents right now. That's almost a 3% move to the upside. RBOB's off about 6.5 cents, and the heat's down about 6 cents. So clearly the oil and the complex there have a much weaker tone. And, some of the things, obviously, the big news affecting market here. You've got stuff going on in Greece right now. Actually, we're seeing a lot of protesting right now. Here's the Greek Parliament's getting ready to take a vote on these possible austerity measures. I think that's weighing a little bit on the market, but more so, I think, we've seen some weak, the Chinese market's a bit weaker. As we know here, that market's been down substantially here over the last month. And you take a look at, their equities market here, for most of the session here, it's been quite a bit weaker, and they've had some weaker economic data. So that's certainly, I think, affecting the market. And then this Iranian nuclear deal, which they've been talking a lot about, although it still faces some pretty big hurdles, as it has to get through the U.S. Congress. And I think there's going to be some real roadblocks there. But that's certainly, I think, traders are looking at that. Now, the big thing with that is that while it's not expected to immediately impact the market, but they do estimate that there's about 25 million barrels that are floating out there that could potentially hit the market, and then after that we'd see it ramped up here. But that really wouldn't be to the beginning of 2016. So I can appreciate where traders are coming from with it, but again here, this whole thing hasn't been completely sealed up, and I think again it faces a lot of strong hurdles and roadblocks ahead here. So we'll see. But those are things that are affecting the markets. Now you take a look at EIA data that came out here this morning. There was a draw of about 4.3 million barrels, a little bit bigger than what most traders were expecting here. So that certainly is a bit of a bullish news. You look at the refinery capacity utilization numbers, they're up year over year, as they have been in many of these EIA reports, currently running around 95.3% versus year-ago levels of about 93.8%. So certainly seeing strong demand there at the refinery level. Their margins seem to be doing very well here with these lower oil prices. Here's my take on where I think oil prices are going to go here right now. You take a look at the chart here. We saw prices consolidating up at around about $60 a barrel. We fell here quite a bit. Now we're starting to go through some more consolidation. It's possible for prices to break, but I think we're going to see strong support coming in around $50 a barrel. Short-term technical indicators are very oversold. I like the way the market is consolidating. A lot of the bearish news is already out on the market, so my take is, how much worse could it get? I mean, it's possible to see prices break down, but I think traders should be eyeing an opportunity here to the long side of the market. My opinion is this. There's a lot of different ways to position yourself. Give me a call and I can explain to you some strategies on how you can take advantage of this if oil does start to make a move higher. And options on futures may involve substantial risk and may not be suitable for all investors.